We are in a huge debt-cum-credit bubble. Now, when that starts imploding, what you're going to get is you are going to get a weakening dollar. The dollar is going to go down, its purchasing power is going to go down, and if you like, the first signal we've got of that is the gold price measured in dollars rising. If you do have gold, and particularly if you've got legal tender, it varies, the laws vary from country to country, but if you've got legal tender, then you can presumably use your gold to buy real estate, for example, or buy farmland, or nice country estates, or a hideaway away from anywhere, which might insulate you from. The world's money system is very close to falling apart. Years of keeping interest rates artificially low, never-ending credit growth, of course, one of the biggest debt bubbles in history. As that boom starts to burst, the warning signs can already be seen. The dollar's value is going down, and gold prices are going up, and bigger problems with the relationship between bond yields and stock prices. These things are not happening by chance. They are signs that the paper system is breaking down deeper. When credit and trust are the only things that support a currency, it falls apart quickly when trust is lost. History has shown over and over that what follows is not only economic instability but also social and political chaos. Alasdair Macleod, head of study at Gold Money and a well-known economist, has spent years looking into the problems with the way money works today. His work is mostly about economic history and the risks of uncontrolled credit growth. He has experience in banking, fund management, and economics. In his warnings, he often draws attention to the similarities between the current unstable financial order and the disastrous falls of fiat systems in the past. Macleod says that tangible investments like gold and silver are still the only safe ways to keep your money safe as the credit bubble bursts. History doesn't repeat itself, but it rhymes, and the current inflationary problem sounds a lot like other times when money ran out. It's no longer just about getting good returns on investments. Protecting wealth is also about staying alive in a system that is failing. Now here are some clips from the conversation with Alasdair Macleod. Before we go any further, please subscribe to our channel and click the bell button to get updates when they happen. Have fun with the movie. It's no secret that we have a lot of debt. When that starts to fall apart, the dollar will get weaker. When the dollar goes down in value, it means that it can't buy as much. If you want, the first sign we have for that is that the price of gold in dollars is going up. That's right. We're talking about how real money without counterparty risk works with credit. The second thing is the long bond yield, which will go above that 5.1% mark. It's, I believe, pretty soon, maybe in a few weeks. Third, there is a huge difference in value between the return on the long bond and what's happening in stocks, with the S&P hitting new highs. Since the long bonds first peak at about 5.1%, you might think, let's go back a bit, broke out of a long-term trend of falling yields and went back to around early 2022 when it shot through 3%. At that time, I believe the S&P was around 4,200. Now it's 6,500, and even though the bond is long, you're still going up. To put it another way, this is a bubble. Who cares about prices? We're going to buy it since the price is going up, and you have the guesses in Bitcoin and everything else. In other words, this is a market for speculators. The money is in a bubble. It will have a huge impact on the dollar when that bubble bursts. What if you don't have gold and, I guess, silver? There are other things you could do in this kind of disaster. To be honest, having the tools to grow your own food does become pretty important. The fact that we live in towns is a big problem because it's hard to get the things we need, especially food. That's not going to work. Who would want to sell food to people in towns who can't afford it if they are growing it? I'm sorry, animals, but you're going to live a little longer. That really is a problem. You will lose all of your cash. It's really that easy. Think about how much 4 trillion marks was, if you will.
That is, it was, I believe, I can't remember the exact number, but before the war, the total amount of money in circulation was counted in Reichsmarks, not trillions or even millions, but really that number was very, very low. Dollars that aren't backed by anything won't buy you a cup of tea at the end of the day. You can cash in gold, though, for dollars that don't have any value, which you'll spend very quickly before they lose even more value. That, in a sense, was the lesson of that event. Besides that, if you have gold, especially if it's legal cash, you might be able to use it to buy real estate like a house or a farm or a nice country estate where you can hide from everyone and everything, which might keep you safe. This is a really, really big problem. Because let's face it, very few people actually have gold or have gold in any real way. It will be very bad for everyone. We haven't even talked about the problems that come after. To use Germany as an example, the total collapse of the currency and the economy in 1923 caused political instability. In fact, it led to Nazism, Hitler, and all that other bad stuff, as well as World War II. The thought is that this will just clear things up and let us go on with our lives. It's not that easy. It's not really like that. Being very careful about what's going on is still going to be important after what looks like it will be another big inflation and the fall of paper currencies. What worries me the most is that I don't see how any leader in the West has the power to actually fix the problem. In light of this, we should feel more sorry for the problems the German political class had in the early 1920s. I'm sure that if you look into it more, you will find that some people knew what they were doing but not had any other choice. That's how it went. Get out of debt. I know it's hard and you can't really get out of debt because gold doesn't really work as money anymore. It hasn't since the Middle Ages. Credit is what moves around. And most people don't get this. You have to be open to credit, but make sure you're protected against the things we've been talking about in this movie. They are going to happen, and I think they will happen within the next few months. Today, things go by a lot faster than they did back in the 1920s. In the 1920s, you paid for things with cash and then borrowed cash when cash wasn't worth much. People wouldn't cash your checks because they took 3 days to clear. What will happen to the value of that check in 3 days? It's like everything else. It goes down. But payments are quick these days, of course. It has electronics. Things aren't as bad for you as they were for us back then. In terms of banks, it's clear that technology has improved. After that, you should think about how safe your bank is. We know that the federal government and the budgets promise to keep the banking system honest. We're not going to let banks fail. A bank that isn't doing well will always be bought out, and investors will be safe. In fact, they have to do that, because the FDIC security isn't enough. Small part of the whole debt. Yes, this is something to think about. I believe the most important thing is to know what's going on, and have some cash. That's why I set up my Substack, to teach people who aren't necessarily in the finance sector to really understand what's going on. Because if you ask people in the finance sector for tips on the future, they will always give you the same answer. The people involved have no idea what's going on at all. Why is money not working anymore? They think that cash is money, but it's not. It's money. It is just another way to borrow money. It's the best kind of honor. Everyone acts in a dangerous way at the height of every big bubble. Prices will only go up, so borrow money to buy. That way of thinking is still around, just like it was during past manias when prices didn't matter and easy credit led to gambling. 100 years ago, this kind of behavior happened before the terrible fall of the German Reichsmark. After the First World War, there was a sharp drop in the value of the currency, followed by a short boom that made many people think the worst was over. Stocks went through the roof, the dollar temporarily got stronger, and regular investors rushed in because they thought good times were back. But the credit system was getting worse below the surface. Late in 1921, markets reached their highest point, the value of the dollar began its long-term fall, and hyperinflation started. There are a lot of similarities with today, overvalued stocks, rising bond rates that point to a buyer's strike, and governments that have to keep making loans. When people lose faith in the system, it has to pick between a market crash and a currency crash. In the past, it has been seen that officials always choose the currency crash. That path goes straight to the last stage of money collapse, where only real things like gold are worth anything. We need to go back to the interview. In other words, they'll tell you, look, it's a sure thing, the market is always rising, we just can't stay out of it. To buy more stock, we're going to borrow money, that is, we're going to make a lot of money. Isn't it great? Yes, of course that's happening, but that's just because we see things like that at the top of every wave. Stocks are being bought by people who don't know what they're doing. Why? They will always go up, so they're going up. They weren't at all. There were jobs, but not enough to really spread the benefits of a growing economy from the very rich to the rest of the population. Then on December 1st, the stock market reached its highest point. Then I believe it dropped about 25% in December of that year. That was the start of the next part of what was going on. The value of the Reichsmark went down even more quickly at that point. From there it began to fall. From that point on, if you will, the government printed more Reichsmarks because things weren't going well. You were living through the credit collapse. What did they do? To make up for the drop in private sector credit, they raised the amount of government credit. Price drops happened because of this. Prices kept going down all the way through November 1923. Before the First World War, one Reichsmark was worth 23 US cents. By 1923, it was finally fixed at about 4 trillion to the dollar, from 23 cents to 4 trillion to the dollar. In November 2023, the currency fell completely. Everyone got in shape. Oh, I see. From everyone except the really rich investors and Hugo Stennis, who was known as the king of inflation. Again, it was the same thing with that guy, one of the Thyssen's. His name was Fritz Thyssen. Some of these guys were very good at playing the price game, not to mention that the inflation game back then was pretty easy, and we can't play it now. And Germany was going to send that to the US. For those exports, gold-backed dollars were made, which when compared to the foreign currency was clearly a huge benefit for the industrialist. This was on top of the fact that his manufacturing costs were going down because the Reichsmark was falling. Also, businessmen like Stinitz and Thyssen were strongly against any efforts to stop rising prices. I mean, it was really good for them. You could buy almost anything if you had money. A house with 6 bedrooms could be bought for $100 in a fancy part of Berlin, which just 2 years before was the domain of the very rich. I mean, the boom has had a lot of effects, like a stock market that is going up. What does that mean for the cost of apartments in Manhattan? That's right. In other words, you can see that the fall was almost complete when measured in dollars. I mean, like I said, $100 gets you a great deal. You were right, $100 was a huge amount of junk Reichsmarks. But that's a pretty easy lesson to learn. In this case, you leave credit behind and move on to real money, which is obviously only gold without any actual gold and no counterparty risk. I don't think I've ever seen this lesson written before though, and that is that we are actually seeing something very, very similar to what happened in Germany between 1918 and 1920. I know that things tend to rhyme rather than actually copy, but what we are seeing now is very, very similar to what happened in Germany between 1920 and 1922. Are we ready to start that last phase? Well, I think the answer is that if I'm right and long bond yields do go up, it will cause a buyer's strike where people don't want to buy government debt because of all the bad news, which will crash the stock market and cause banks to start foreclosing on loans. I especially agree with what you said about people who bought money on margin and will have to make payments on that debt. They will be sold to a market that doesn't want them. Then what does the Fed do? The answer is that the Federal Reserve and the Treasury have set themselves up to be the buyer of last resort for everything. What is it going to do? The short answer is that it will try to keep the economy from falling apart completely. This will mean that the currency will crash. That's what you'll get. I can see how that third part will work, like what happened in Germany from 1922 to 1923. I can see that coming up. Of course, what happens to the dollar affects all of us. What it means whether we're in a debt trap or not doesn't really matter. Yes, we have, and it will only make things worse. However, the dollar is to blame for this happening at this time. Every big boom in history has been accompanied by the same false belief that things are different this time, that markets will keep going up, and that credit can keep growing without any problems. Today, stock prices are going through the roof. People are speculating on assets that aren't backed by anything, and the financial system is heavily loaded.